Have you ever considered how secure your business financials really are? In a world where digital transactions are the norm, safeguarding your assets is crucial. At Passive Workforce, we don't just teach how to start, grow, and exit your company. We ensure you're equipped to protect your hard-earned success and achieve passive income for life. Today, we're diving deep into fraud protection for your business accounts and personal finances, sharing essential strategies to keep your assets safe. Let me start with a personal story. I've experienced fraud firsthand, a situation that taught me the importance of vigilance in financial management. It was a wake-up call to tighten security around my business accounts. This experience propelled me to learn and implement rigorous fraud protection measures, ensuring that my financial assets are shielded against unauthorized access and transactions. Unfortunately for me, I've been in business for a long time, and I've seen and experienced firsthand how people commit fraud within my companies. And at times it's people who are really close to you. The first time that I ever experienced fraud was an internal employee who was handling my contracting. Essentially what they did was they got access to my checkbook, stole checks, stole my signature stamp, and proceeded to write themselves fake checks. And the funny thing is, this was my first hire in this role ever. Before that, I was doing business development myself, or starting to grow. I had a little more capital to spend on an employee. I hired a young guy just like me, and what he did was realize that I had money and decided that he wanted to take some of that for himself. So he just went on this check fraud campaign, and every time that he would write a fraudulent check, he would call out sick for a few days. First it was his grandmother died, then he had some other family emergency, and finally the bank called me to say that my line of credit was overdrawn. What he did was he stole checks that were assigned to a line of credit that I used only for payroll. After trying to get an investigator involved, the police department didn't do anything, the banks didn't do anything. He was able to walk away scot-free with the money that he stole from the company. And the only thing the bank told me at that time was that it was my fault, that I needed to be more secure with my checks. It's my responsibility to secure my checks, not the bank's responsibility to verify that your checks were issued to the right person. These were deposited in phony names, used a signature stamp. He even had when he didn't have access to my signature stamp, he tried to forward my signature and it was completely off. That was the first time that I experienced fraud. So what did I learn from that event is that I need to keep my checks secure. The second form of fraud that I experienced, and what we're going to be talking about, is when my company got even larger. You see, when we started hiring and employing hundreds of workers, what happened is that a large pool of our workforce were still getting checks. And since we're in the home care space and we also employ CNAs, a lot of that class of employee doesn't have bank accounts for whatever reason. Either they're trying to evade taxes or they just don't trust in the banking system, but they'll use check cashing places. And what started to happen was once I hired an internal accountant, we started to learn that people were creating fraudulent checks consistent with our payroll account. My accountant found checks that were created that weren't on our payroll journal. And that was what alerted us to what was going on. So when you're running a business, you should be utilizing bookkeeping, right? And when you're properly bookkeeping, you're comparing all transactions in your bank accounts compared to your invoices, the checks that you've created, the payments that you've created, etc., so that everything lines up. While she was doing this, she found that we had all these checks that were written to make up people using our check number. But what was odd was that the checks weren't the same design as the ones that were being issued by our payroll provider. And what we learned was that there's people who go out there who will work for companies, home healthcare agencies, staffing agencies, get a job just to get access to your checks and create fraudulent checks. Also, there's another form of fraud where it's the people who are actually working at the check cashing places that realize, on this particular pay date, a lot of people come from this company to cash their checks. Hundreds of people are coming to cash their checks, or dozens of people are coming. This is their payday. We could make our own fake checks and sneak them in and get them passed through this process. Again, went to the banks. What can you do about this? And they essentially told me pretty much the same thing. Oh, there's really not much that we can do as a bank. We can't verify hundreds of checks, millions of checks every day. It's up to you to put safeguards in place. So we got to work. Securing your business starts with how you organize your accounts. segregating funds, using dedicated business banking services, and employing multi-factor authentication are just the beginning. I'm going to guide you through how we structured our accounts so that you can minimize fraud risk, from choosing the right financial institutions to leveraging technology for enhanced security. It's all about creating layers of defense that protect your business from potential threats. The reason that I'm doing this video is because one of my friends recently fell victim to the same sort of fraud that I had fallen victim to. And I was like, you know what? This is what you need to do to protect your accounts. And then it hit me. This is something that I should be sharing with everybody, not just my friends, but our clients and the people who are getting into entrepreneurship. Remember, here at Passive Workforce, we help companies start, grow, and eventually exit. And we need to help you have these safeguards in place so that you're able to have secure processes, good accounting processes in place, so that when a buyer comes along or when it's time for you to actually grow your business and you have multiple employees with access to your accounts, that you are secure and that you're safe. Usually when we start a business, we just go to the bank and we open up a standard business checking account. Maybe we get encouraged to open a savings account. If you have a checking and savings account, great, you're in the right place. But here's where it gets tricky. The first and primary account that you should set up is your accounts receivable account. This should be a checking account. This is where all your billables come in, and this account should only be shared with people who are receiving the money for the company, or shared with people who are sending you wire transfers and ACHs. They're the only ones that should have access to your routing number and your checking account number for that particular account. The reason for that is that the people who are paying you typically aren't the ones who are trying to commit fraud against you. However, by isolating this account and making it the only account that's receiving funds, that's one way of protecting yourself, because you know that who you've sent this account number to, and you're going to be able to investigate a little bit better based on who has access to that particular account. But below that account is where things get a little more complicated. You're going to want to have a few different other checking accounts segregated in a few different ways. The reason for that is that you don't want to keep all your money sitting there in your accounts receivable. Remember, other people have access to this account now, so you don't want to have all your capital in one place. What we tend to do is we open our checking account, the money comes in, and all the transactions occur from that same account. Shouldn't happen. That's not good, or within general accounting standards, shouldn't be the case. Accounts receivable only receives the money, then it has to be distributed. The other accounts that you need are a general expense account. This is where you're going to be paying all your regular transactions. You're going to need a payroll account, one where you're paying your actual employees. And then you're going to need an account preferably for benefits, so things like workers' comp, your healthcare expenses. I like to segregate those into another account, not for fraud prevention, but to accurately track those particular expenses, because that's where your tax deductions are kind of assigned, and you're gonna get audited if you have a large workers' comp. So you wanna make sure that your payments for those sort of fringe benefits and the mandatories are coming from a separate account. At least that's how we have it segregated. And after you have this general payables account and your payroll account and your benefit checking account, you should have a savings account. And the reason for that is that that savings account obviously is going to be an interest-bearing account, and any surplus money, rather than sitting in your checking account accruing zero interest, should be moved into this particular savings account. Now, the way that you want to think about this is that from the receivables account, where the money first comes in, you want to most likely move all of that money first into your savings account. And the reason for that is that you want all your money to be accruing interest as soon as you get it, right? Whether it's the daily rate or whatever, it's better than collecting 0% interest while the economy continues to inflate, right? So you might as well put it in the savings account so that you could bear some level of interest. And then you should only be moving the amount of capital that you need to move into the other respective accounts according to when you've accrued that sort of expense. What do I mean by that? So if your payroll is $20,000 every week, then whenever they're going to draft your direct deposit and your checks and your payroll processing fees, you want to have the money in that account. So if that equals $20,000 and that needs to be in the account by Thursday, transfer the money in on Thursday, right? So that account should be sitting at or near zero up until payroll is due, right? That way, if anybody tries to commit fraud on that account, there's no money there. And the only checks and the only money that's in there is consistent with this week's payroll or whoever hasn't cashed checks from last week's payroll. So you have minimal exposure to that account, right? Because that money is getting consumed and used. Same thing goes with your general expenses. Keep that account empty until you're issuing your checks and issuing your payments. We like to process payments on a particular day of the week. I'm not going to tell you that, right, which day it is, because then you're going to know when the account is loaded. But we choose a day of the week that all outbound payments are going to be made. The checks are issued, ACHs are initiated, wire transfers, etc. And on that particular day, the accountant tells us we have $50,000 of expenses that are due this week. We transfer from the savings account to that account so that those expenses can be paid and tracked. Same thing goes with the accruals of benefits. We have $10,000 of benefits due this week from the savings account routed to that. All the surplus is our cash flow and should be sitting in the savings account collecting interest. Looking at this diagram shows you exactly the full setup that you should achieve. And it's not going to cost you much money. Maybe your banks might charge you some fees, but believe me, it's going to be a lot cheaper in your accounting fees than it's going to be trying to reclaim that money from fraud. Now, when it comes to which bank, I personally used to hate Chase Bank because they had a lot of processes in place. They weren't the most friendly lender either. But over the years, Chase has become my favorite retail bank, mainly because they have the best online banking system. What I recommend is that you bank at Chase. I don't get paid for this. I'm just recommending it because they have some of the best fraud protection software that I've seen in the market. What you're going to want to do is on all of your checking accounts, you're going to want to establish a service called Positive Pay. And what Positive Pay is that you tell Chase the check number, check date, and the name that you are making the check paid out to. That way it gets registered. If any check is presented that isn't registered, automatically denied. Actually, it doesn't get automatically denied. What happens is that you get an alert at the top of the day saying there's been a check that's been presented that doesn't match what you've entered, right? That's flag number one. But sometimes it's human error where they've typed in someone's name wrong or they put in the wrong check number, but you get the check image. So you can check that check image against your registry of checks that you've created and approve it. If you do not approve it within 24 hours, it automatically declines. So what does that do for you? It makes sure that only the checks that you've issued or physically reviewed are cashed. Other than that, everything else gets denied. We put that in place, obviously, on our payroll accounts, on all of our payable accounts, and it's been what has resolved things. Because anybody who tries to create a fraudulent check can't, right? They create a check, but it can't get cleared because nobody would clear it. The only time that they could sneak it through is usually not on your end, it's not your problem, but it's the check cashing store's problems because the check cashing doesn't have access to the same banking system as Chase. So what will happen is the check cashing vendor will pay out on that check to later find out that it's fraud. And they'll contact you and say, hey, you bounced this check. And it's like, no, my friend, you cashed a check that wasn't approved. Somebody scammed you. This is not our problem. That's your problem. This wasn't on our register and it's not your liability. What will happen is they'll probably not cash checks from your company anymore, which is fine because those people could go to the bank, and Chase is popular enough that there's enough Chase banks throughout the country that they could just go to the Chase bank and cash your checks against their account, verified by Positive Pay. Now, this is an add-on service, but it's a good service that protects you from losing capital and increasing your probability of having fraud committed against your payroll accounts. Now, remember, anybody who has your check can create a fraudulent check, which is insane to me. If you watch the movie Catch Me If You Can, it's quite easy to defraud the banking system. I'm not going to do a video on how. I don't want to teach people how to go about it, but it's really too simple. And you as the business owner, as the police have told me, need to put the right safeguards in place to protect yourself. Strict financial controls and meticulous bookkeeping aren't just good practices, they're your first line of defense against protecting yourself from fraud. So implementing regular internal audits, setting up alert systems for unusual transactions, and maintaining clear records are all going to be crucial steps to protecting yourself. I'll show you how establishing a robust financial management system can safeguard your assets, ensuring that every dollar is accounted for and remains secure in your business. One thing that us entrepreneurs often neglect is proper bookkeeping. And the reason for that is it's an additional expense. And what we tend to think and believe is that as long as the account balance is going up, everything is good. And more or less that is the truth. But you need to do things to really design your financials so that they are clear to understand for financial institutions and for whenever somebody's potentially going to buy your business. When you're trying to get a loan, they're going to ask you for proper financial statements. If you're not able to produce them, they kind of hurt your credibility as a business. Same thing when it's time to sell your business. There's so many home care companies that I look at that when I ask for their financials, everything is late, everything is disorganized, things don't make any sense, and ultimately it's going to hurt that business's value. So if you want to actually implement good financial practices, you have to kind of just research like GAAP principles of accounting, so GAAP. So these are generally accepted accounting principles or accounting practices. By following GAAP standards, you'll realize that you have to have segregation in your accounts, kind of like I just described, but you should have segregation in roles. So there should be a controller who's really implementing all of your internal controls. There should be an internal control document that dictates how are you accounting in this company? What are the processes that you have in place for these internal controls? And it's the controller's job to ensure that all the people in the accounting team are following those internal controls for financial reporting. So first you need a controller, right? And this is gonna sound kind of scary because it's a lot of people, but you're gonna need a controller in place because their main job is to ensure that everybody else is following the internal controls and they are the final safeguard in protecting the money in the company. Then you should have someone who's a dedicated account payable person. Now, this is a person who's paying all the bills. They can also be responsible for your payroll. So any outbound money, they handle. Your accounts receivable person should be separate, and they're tracking all invoices, making sure that the money that you're due is collected, recorded, and reported. Then you should have a general ledger bookkeeper or general accountant. And you can have multiple people playing these accountant roles because one could be a budget accountant, another could be a tax accountant, but it varies based on the size of your organization, of course. So you're gonna at least wanna have somebody who's just documenting all the transactions. Now, you might be thinking, well, all these people, how does it protect me against fraud? Let me give you a very basic example. Let's just say that you had somebody in your human resource department that was looking to create fake checks and ghost employees. This happens. So they create a fake employee and they assign them to your payroll system. And if they're the same person who's doing payroll, they'll just add checks for miscellaneous fake people. And how would you ever know? You wouldn't know, right? Because if you don't have positive pay in place and you don't have a bookkeeper checking things out and you don't have internal controls, that human resource person could be sitting there in your organization cutting checks and you wouldn't have any idea. And it could be $100, $200, $800, things that don't rock the boat too much or don't raise too much suspicion, but it could happen. But if you have good internal controls in place, there's going to need to be checks and balances between those departments. So human resources may be adding new employees, but they are not running payroll. And the payroll person can only run payroll using the final certified roster of people who should be paid. And that most likely is coming from your staffing department or coming from your department heads and leadership. So they're only going to submit the employees that are within their department or under their supervision, right? They wouldn't know if human resources is creating ghost employees unless they're working in conjunction, and you would also need to have some safeguards against that. So our software, On-Time ITS, is the only record of time and attendance. That has to be certified by the lead in the coordination department. Who has worked this period? How many hours? All of that is documented in the system. And guess what? Our billing is also ran from that. So when the controller needs to do internal audits to ensure that all of the billables and all of the payables are aligned, they'll know. And just to give you an example, let's just say that there is a ghost employee on the roster, right? You have a coordinator working in cahoots with a human resource person to try to create fraud within your company and you're doing audits internally, what you'll realize is that there's rejected claims associated with these fake entries because there should be no patient attached to it. And if there is a patient attached to it, those claims are going to reject because they're not going to be authorized. So that will be the first red flag. Let's look at all of the rejected claims and who was working on those days. That investigation will lead to uncovering what is actually happening. So by having these safeguards and these checks and balances in place, you ultimately are ensuring that your books are clean, safe, secure from fraud, and you have these checks and balances that protect from the worst case scenario. If you're ready to secure your business finances and improve your record-keeping practices, book a 15-minute free consultation with our partners at Healthcare Back Offices. They specialize in guiding businesses like yours on how to protect financials and maintain impeccable records. Don't leave your financial security to chance. Click the link below to schedule your free call, and don't forget to visit our website, pastworkforce.com, to get industry-leading advice like this to take your business to the next level. Let's ensure your business is protected against fraud, paving the way for long-term success and passive income.